Bitcoin hash rate has once again reached a new all-time high. The reason? An increasing number of miners, greater energy inputs, and a growing number of companies and nations actively participating. But what exactly does this number signify, and what does it mean specifically for investors? Welcome to Inside Bitcoins, where we deliver daily essential news, analysis, and insights from the crypto world. Today, we focus on the evolution of the Bitcoin hash rate, the geopolitical background driving this rally, and explain why this development could be extremely bullish for the crypto market. Currently, the hash rate stands at an astonishing 950 million terahash rates per second. For context, in July 2024, it was approximately 550 million. This means that in less than a year, the network's computational power has nearly doubled. The hash rate measures the amount of computing power miners provide to the network for verifying transactions and generating new blocks. All this operates under the so-called proof of work model, where whoever first solves a cryptographic puzzle can create the next block and is rewarded with new bitcoins. Many people are unaware that a higher hash rate is not merely a sign of technical growth, it also makes the network safer. To attack Bitcoin, one would need to control more than 50% of the computing power. Therefore, the higher the hash rate, the more difficult such an attack becomes, solidifying the foundation of the entire ecosystem. The ongoing increase in computational power signifies primarily one thing. Miners believe in long-term profitability. Mining is expensive. Electricity, hardware, and maintenance incur significant costs. The fact that investments continue to rise clearly demonstrates market participants expect further price increases. Particularly intriguing is the rising involvement of nations, both directly and indirectly, in Bitcoin mining. Numerous large-scale mining farms in the US already operate with political backing. Countries like Russia, Kazakhstan, Brazil, and even African nations are increasing their shares of the global hash rate. Analyst Da Vinci Germani describes this as an arms race, a competition for the last available bitcoins. This makes sense given Bitcoin's limited supply of 21 million coins. Securing mining capacity now could grant strategic advantages in the future, such as establishing national crypto reserves. Bitcoin's geopolitical relevance is also evident in the increasingly widespread geopolitical distribution of mining power. China was once the undisputed center. Today, the US leads with around 36%, but many new countries are actively participating. For the network, this means greater decentralization, resilience, and reduced dependency on specific regions. In short, the high hash rate is not just a technical indicator, but a massive vote of confidence, signaling market readiness for the next cycle. Some users on X already suggest price targets of $200,000 this year. Will it reach that level? Hard to say. However, the global expansion of mining capacity is undoubtedly a bullish sign that shouldn't be ignored. What do you think? Is the rising hash rate a clear indicator of the next bull run, or do you believe the market will continue moving sideways for now? Let us know in the comments. If you like this video, give it a thumbs up, subscribe to Inside Bitcoins, and activate notifications so you won't miss updates on Bitcoin, altcoins, and the hottest new projects.